So one thing is how it's fitting into your goals, number one. Number two, you have to research about the asset manager. Even right now, for example, there must be not less than 20 asset managers in the country. And we work only with the top four because our methodology is we go meet them, we understand their background, we speak to the founders, we speak to the co-founders. Only after we are satisfied that, yes, these guys have the ability to deliver, given that we've got real estate experience, we ask them the kind of questions that we want answers to. And once we are satisfied, we only then start working with them. Post that, you have to research whether the opportunity that is being given is the right opportunity. Mind you, not every asset manager will always come up with a fantastic offer or a product. It's got to be meritocratic to that particular opportunity. You have to see the merits of that particular opportunity, and not because it comes from a certain brand that it will always be good. So what does it mean in terms of researching the right property? You have to look, and as you may have seen our videos, we suggest that you go in for an A-grade property and A-grade location. Now, that can't be done sitting in office. That can't be done if you are, let's say, a lot of investors might be overseas or not within the country, within the city. And so we physically do that. We go check out the property because luckily we've been exposed to A-grade assets, whether Cyber City in Gurgaon or we are in Bombay, so Capital, One BKC, whether it's Embassy projects or Brigade projects in Bangalore. So we've been exposed to a lot of A-grade assets, which enables us to understand that what is being shown on the presentation doesn't translate on paper, and what is the element of truth in that. So these are the checks that one has to do. And of course, from there, you have to check whether, okay, A-grade location, A-grade property, it's good value for money, how? But you have to buy it at the right price. You have to see what is the ongoing rate in the market in similar projects. And then, of course, you have to also ensure that the property rentals are not inflated. A case in point, we got an investor who asked us to evaluate an option from Hyderabad. Now, Hyderabad, that particular micro market, had a rental of 60 rupees. The developer was committing 85 rupees for the next 3 years. Therefore, with a 10% net yield, developer, instead of selling the property at 10,000, because he's giving inflated rentals, he was inflating the sell price and taking 12,000 rupees. Now, this is disastrous for any investor because, number one, after 3 years, what is developer done? Basically, the developer is doing a construction finance, which means that if he was to go outside, he would get loaned anything from 12 to 18%, depending on who the developer is, their books of accounts, so on and so forth. Because he's inflating the rentals, 3 years hence, you're not going to find somebody at 85 rupees. You may find somebody from, let's say, 60, 65 to 70, 75, right? Now, that's a big hit for the investor because at that point in time, you're not going to get fetched those rentals, number one. The capital appreciation the developer has already taken away. So from 10,000 to 12,000, you've already paid a higher price. So these are things that are very important to check. And finally, the documentation. Again, given that we are working with the top asset managers, we don't see a problem with the title of the property. But the challenge is to ensure at least fractional ownership so far. SM REITs, the situation is going to be different. But fractional ownership platforms will continue and those kind of properties will come in. So the way to evaluate the documentation is also to check what is the agreement between you and the SPV, which is the special purpose vehicle. Again, Krupa mentioned about non-standardization. We've had agreements like shareholder agreement. One platform would do that. Another would do articles of association and incorporate everything there. So these are important things. And again, like Krupa pointed out, all these guys want some sort of flexibility, and naturally so. They would look for an offline meeting, and then we had to push them, say, no, you have to give provision for online meeting because that's in the investor's interest. Thankfully, SEBI has banned offline meetings, so which is great news. But these are the steps that one needs to take to evaluate a particular investment opportunity. And of course, if you don't have the time or the expertise to do that, all you need to do is just simply call us.